Good morning. It's great to be here. Good to see many of you. I think the focus for today is really capital markets, the importance of it, right? All of you are involved in this. We're just looking at the economy, the worldwide economy right now is about $117 trillion GDP. Just the bond itself in the world, it's about $140 trillion, the bond market, between the debt, the government's issue, the private companies, and then if you look at the equities, it's about $270 trillion. And I just saw a statistic, if you actually add derivatives, options, it's $1,000 trillion. So collectively, what we represent here, all of you are working on the most important parts of our economy, which is capital markets, which funds pretty much everything. So really, in this context, we are dealing with unprecedented amount of data and volume. Just every day, I hear from all of you, 20 terabytes of data just from one venue. And we have 45 petabytes of data just in one historical tick data. And if you think about signal, which is really the patterns you're trying to find, it is becoming harder to find signal in the noise. And just the alternate data, one source alone, the satellite images and others what people are processing, the Google map world is 90 petabytes. Every day there is more images being taken. And in that, I don't know how many of you in your bosses or CEOs will be telling you, why can't we just use the latest LLM to find alpha, right? Why do we need us, right? Because every day OpenAI is hiring thousands of investment bankers. They're looking at tick data. They're trying to use reinforcement learning. The big thing to me, at least, is that we talked about AI factory last time, but it's really AI, especially generative AI, just because you can do processing sequences, it doesn't really, it's not a causal. It doesn't have time. It really, what we're doing is just taking one slice of the data to think about what we are trying to do. So, right backwards. So this. So in terms of the architecture is really about signal. I think about this as, what you want is, the problem statement is, not only you have to deal with market data and other things, very little signal in it. Do you go deeper in order to analyze microstructures and find the icebergs and other things? Or do you go wider with alternate data, which is not only quantitative analysis, but you need to do qualitative analysis? So that's really the problem, statement I want to kind of leave you with, because everything we do today is really focused on that. How do you find signal from noise, but also going deeper versus wider, and basically also trying to be able to explain to everyone, it's not every day there's a new LLM or update. So what we're finding is the fragmentation. It's fragmentation between not just from, we talked a little bit about, you'll hear about structured, unstructured, but the way I think about it is you can go deep on market data and you got people who are looking at traditional quantitative analysis, or do you go qualitative analysis? The fragmentation happens because you have different pipelines and people looking at research, then you go to trade. That's past. You can't do research and trade. You need to do, being able to do research and trade, it's all connected. Finding the signal, what I think about it as a signal factory. You ingest different type of data, but you're analyzing, you're predicting, and you're taking action. We may call it agentic AI, but all of it has to come together. So there is latency loops. Every little hop or whatever, it's not just about the data. And when you think about the silos of teams you have research teams, you've got quant teams working on something, and then you got engineering, the execution teams, different teams within the company. So it's not just the latency between pipelines and data, but you also have everybody's working on different time frames. And the LLMs, for example, has become the biggest thing right now. AI is all about LLMs, Gen AI, but they're all operating in different time frames. Just try to do an as-of join of what you want to find. It may do a correlation, something, all of us can say, hey, something happened, there's a bad news, and this is going to impact the stock. Is it a signal or noise? Just correlating versus causal. What we are really here is really what you are doing as humans in the loop, and being able to bring the cause. And then blind spots, we all have that. And I think the other thing is alpha is very hard to find. The signal, the market is not only efficient, but before you know it, there's a leakage. The half-life period for alpha is reducing. By the time you think you find something, it's gone. So that's really the challenges we're facing. The fragmentation is not just about the different silos and different people, but also you have, how do you go from research and then to trade to actually bring it into one loop. And in our case, I think, we have been working with basically the world's biggest and the most prestigious firms in the world, KX alone. And later on, I'll talk a little bit about we merged with OneTick. We've added another set of customers, and we kind of can represent, whether you look at Citadel coming in, the number one market maker in the world, to the most prestigious investment banks, asset managers, the regulators in the world, we work with all of you. So what I'll be sharing here is really things what we are finding across all the companies. We're really privileged. I mean, I'm very grateful for all the things we are learning, but really the fragmentation to a signal continuity is very important. Our biggest thing is it's not about, KX is known for, we process very large amounts of data at high speed, survival the fastest, but you're only looking at one slice of the puzzle. So if you just want to go deep, you can capture data and ingest data, whether it's petabytes of data at scale, that's one aspect of it. But really now, when you expand, go deeper to wider, how do you get features, what's causal from the data, what you're extracting, and then being able to find the signal from the noise. And then it's a loop. You want to, again, not have research separately and then being able to execute. We'll have different sessions today, which will kind of show you how we are helping customers to combine all of it into more of a temporal engine. And that's really the focus for us. I mean, in terms of being able to execute the feedback loops and then getting to no handoffs, and there is lots of drift between the different teams. So that's really what we are finding is that, how do you remove the fragmentation, the friction, and then being able to create a continuous intelligence loop. And it's not just about generative AI. You've been using machine learning and deep learning all this time. How do you bring them together so that you can go both deep as well as wide, and you're trying to find something which makes sense and you're able to beat the market, right? That's one of the things we'll kind of look at the different sessions later on is how many of you are doing that. If you are getting 20 terabytes of data every day, and the market is the highest ever this year, it went up in March, 35% increase. And many of you sent me emails saying that you didn't miss a message. We are very proud our technology is helping you, but just on the market data and other things. But if you actually look at what's happening, it's not going to reduce. It takes hours to end of day. If you want to process your analytics and get ready for the reports, it runs reports for 6 to 8 hours. So later on, Paul Colgan will come and talk about how we are doing it in minutes so that you can focus on finding the right signal to use for next day, or if you want to go from alpha benchmarking, right? So some of those things is what you need this continuous. The other one is, I want to frame this signal in terms of what's the architecture, because we talk about architecture, that becomes your differentiator because you need a signal generation stack, not only technology perspective, as a company. So think about as a signal factory. We see as 3 shifts are happening in the market today, or 3 drivers. We'll go into each of them, and we actually have case studies, so that's not something where theoretically we are saying these are the things what you should be thinking about. It's really based on some of you who are coming and later on our customers are presenting. Each of them is framed on what we've learned and how we can scale. The first one is dual mode. In this case, it's really about not just looking at data from structured, unstructured. Again, it comes down to how do you look at the market data as well as alternate data. You're applying traditional machine learning and also generative AI. And then you are looking at the quantitative world from a physical world. What happens to companies, it's not just about what you do quantitatively analyze. but how do you actually look at what's happening in the physical world? What tweets are happening? Every day you don't know what's happening in a second. And is that a trend? Is it a regime change or what happens, right? So the dual mode allows you to, later on when we talk about the RBC use case, you'll see how that comes together. The second one is, I think this explainable is very important because all of us who are in the capital markets know that if you just use a black box, LLMs and others will tell you what it may happen or whatever, but it's a black box. You need to be able to explain how did you come up with the decision? How did you generate the signal? And that to me it's a causal thing. It's not even just explaining, you need to know the cause, root cause. So that's the second part of that is really being able to do that where you connect not only how you come up with something, but how do you interpret what happened. And Nataraj later on when he goes through his demo, you'll see that you're able to actually probe how you came up with it. Just like when you go to the thinking mode in LLM, it'll tell you how it came up with that, right? So you want to do the same thing in a dual mode. So it's the explainable signal chains. And then the third, I think we have this whole, I was last week at DC for NVIDIA's GTC, and one of the things is about, Jensen talks about the computing era, the whole Moore's law is, kind of reached its limits. The accelerated computing, GPUs, basically it's parallel computing, is really what you need. And what that means is that because in order to really process the petabytes of scale data and alternate data and going wider, you cannot just use the current CPU-based infrastructure. The pipeline, the amount of, they've sold $500 billion is NVIDIA's chart they showed. They've already sold $500 billion for the next year. The amount of compute, and most of you, whether you're in an investment bank or you're all buying those GPUs, whether directly or through CSPs. Why is that? And so that's really enabling you to kind of get to the real time, combining this dual mode, being able to get to that. So you can't just use traditional compute. While we at KX have been focused on helping you with using the CPUs and parallelize everything, but now you'll see some of the things what we do today is to show you how we are able to take advantage of this GPU to able to bring that parallelization to accelerate your alpha and signal. So the first one, the dual mode, I think this one is important in the sense that everybody thinks about just AI today has become generative AI. But really the fact is that, we have been doing machine learning and structured data analysis. AI is really not just, that's only one part of the AI. So the use case and the case study here is really for us one of the largest investment bank we have been working on, where they basically are able to bring structured and unstructured together. Because if you do something where you want to do research, you can always use LLMs and maybe use some RAG or whatever to bring some more context, feed your own documents. But that gives you one way of doing it, right? You can bring that. But then if you really want to connect back to all your structured data and the quantitative things, so that's the dual mode, bringing both not only the type of data, but also the type of machine learning, AI, generative AI combined together. How do you drive this into providing the full context of signal generation? So you don't want just partial view of signal, and it needs to consider the expanded signal universe, which includes not only the numeric patterns, but also the semantic patterns. So not just a correlation and causal, so we need to uncover that sort of a cross-domain. Is it just a correlation or is it a causation? And the second part of that is how fast can you generate the signal but also validate it? And you need guardrails. Because part of the problem now is that when you ask a question, the same question 5 times in LLM, what happens? You get different answers. We cannot in capital markets literally use that. You need deterministic way of doing things. So part of this is, how do we validate the signal and have the right guardrails and then having that accuracy? Because I think a lot of times we talk about hallucination. Our mind, by the way, doesn't know the difference between what's imaginary versus real. We are just imagining everything. We're hallucinating most of the time. So that's what AI is doing, is also because you don't know what's real. And so what happens is, how do you know what's accurate? Because part of that is, if you are going to automate and create agentic AI, it's becoming even more important that you actually have everything happens real time. I mean, there's examples of agentic AI where people are trying to book travel, and you go and do airline and rental car and hotel, but those hops, and if it doesn't happen sequence and something is not working, it breaks. So think about that in a quant research and trading life cycle. So if you have any of that breaking it, and if it's not accurate, it breaks the cycle. So that's really the context of full signal generation. Again, you need to think about the goal is the alpha, the P&L you're driving is not just we are going to use a lot of technology and say we are faster or we are better, but are you beating the market? This year has been the most profitable for all companies in the capital markets. If you look at the banks, the highest profit ever. Hedge funds, the biggest, the trade, there is a lot of profit, but there are also a lot of losers. There's few people are making money. So how do you actually generate full context signal? So then, the second driver is you generate the signal and you're beating the market, but then can you explain it? Can you actually interpret that? So if you can't explain, whether it's from risk perspective, there is rules, right? If you make decisions and if you predict something and you can't explain a black box, it's a problem. And so we actually look at that as, not only what you're finding, you don't want to leave, the explainability cannot be outside your signal pipeline. Because that's what happens. Typically, you are handling through separate logs and reports and post, ad hoc analysis to figure out how to explain it. And so what if you could not separate the logs and other things and be able to create doubt around it? So we actually can transform and run the models, and then the output, what you have a lineage, you can actually show the signal is also has explainability and interpretability built in, not separate things. And that to me is what our goal is, right? Being able to need to trace, it's reproducible, and you're able to reproduce something is one of the most hardest job all of us have. We'll go back and try to do back testing. We do lots of things to do it. So that's the defense. So what's the deterministic path from data to decisions? End of the day, the goal is you're getting at a pattern or a signal which is reproducible, and you need to do it, not only fast, but you want to be able to explain, but also it needs to be cost effective. You can't throw in lots of resources, and it also needs to, the P&L is important. So that I think is really some of the examples you see today. Specifically, we have been working with a company which basically has been doing this, having the pipelines together, and the goal here is signal has to be the trustworthy, and it also you are able to defend that, and it also has to regulatory readiness, because we have we can't just operate money as it transfers between different companies and different countries, and everything has to be regulated. So it's not like you can just move fast, but you also have to make sure that your risk office is involved in it. So it's not just the front office, you've got the middle office risk, and then you have the back office and technology. So those have to come together. So the operational agility is important. So if you want to go fast, you need to also bring along your risk, and at the same time, your technology teams have to keep up. So those of you who are in the engineering side and the data, you know how fast you want to move forward, but then you also have to deal with the regulations, and that's one of the reasons where people want to go to startups and not in the banks and other things, because they're dealing with. But how can you kind of bring that operational agility so that you can attract and retain the best talent in the companies you have, versus feeling like, hey, I'm going to go slower here, or rather I go on a startup who can go fast. So it really brings that trustworthiness. It's not just about how fast you can go, but also it affects the people, the talent, and who you work with. The third one is, in this case, it's really, we talk about GPUs, but I think about this as how do we leverage the technology we have, infrastructure, the compute infrastructure is moving from, there's lots of data centers you built. Many of you haven't even moved to cloud yet, right? You're still in the process of moving to cloud, and then you have the real-time lag and latency issues. But now people are looking at GPUs and saying that I need to go faster. So this is quants are trying to do things with bottleneck with compute, and then you got feature engineering with terabytes to now petabytes, and then deep learning models you're applying for unstructured, but what about applying to state models for structured data? And then backtesting of different strategies. If you want to simulate and find an answer before you make a decision, so how do you try out different options? So these are some of the things what the GPUs, before you could do it for Monte Carlo simulation where you weren't bringing data to the GPU, but now we're able to do that. I mean, GPUs have less memory than CPUs, so that's another problem you have to deal with. How much of that you'll run in a CPU? So some of the things what we are doing with the Paul session later on, will show you. We are looking at different type of strategies, which allows you to, one of the well-known hedge fund is doing this, where they're doing alpha benchmarking. So you can actually look at different type of things to see you benchmark against your alpha. So we've rewritten many of the functions in KDB and Q, like as of joins and other things to take advantage of the GPUs. So that allows you to kind of take advantage of that. So you can try out different simulations, different calculations, where you couldn't do that before, because we were primarily focused on CPU only, parallelizing, but now you have an opportunity to do that. And then when we combine that with the MCP and others, you don't have to know a lot of it, because you're able to, some of the things what we have here is to abstract that. So any LLM can connect to backend based on MCP, and it takes advantage of GPUs and decides whether I use a CPU or GPU. So you don't have to worry about that, and it's focusing on that. So really the GPUs are changing the equation more, not just the GPU, the combination of the new architecture is things like Grace Hopper and Grace Blackwell is a combination of CPU and GPU together with shared memory. So we have been engaged with NVIDIA, and the session on NVIDIA covers part of that, which is really how do you take advantage of this new architecture of a hybrid CPU plus GPU shared memory. And there's a memory bus problem, transferring data from CPU to GPU is a problem, but solving those problems will unlock, again, go back to signal generation. So performance means it's not just the discovery, and again, going from research to trade all in one loop. And some of the things what we have done here is to enable, with NVIDIA, being able to do faster signal discovery. And you want to be adaptive. The models are not static. When you develop something in backtesting, develop a model and you put it into production, how do you actually update the models in real time so that the parameters, just like LLMs are training, adapting the parameters and the weights, you want to update the weights of your models so that the alpha doesn't decay, because you're constantly updating it. Then the next one, I think this, again, I want to go back to architecture, because this is example of where we work with RBC, and there is an entire session on this. This is an example of how RBC, they're the largest bank in Canada, highly regulated, but they were able to bring these three elements together. The dual mode, they not only looked at like 1,500 stocks or whatever from research perspective to expanding it to 2,500 coverage, and being able to bring not only the unstructured data reports and analyst reports and everything else to bring that to bear, but also how do we bring the market data and analysis of the structure together, so the dual mode. The agents, agentic AI is really a banker agent which can take structured, unstructured together, take action. So you see that, they actually, I've been working with them and with NVIDIA, so they were able to use GPUs to accelerate some of the real-time ingest. If you process unstructured data, more than 10,000 documents, everything else breaks. And so you're talking about 10,000 documents. If you look at the petabytes of data, the alternate data you're looking at, we're just getting started, right? So KX, we actually focus on that, not only performance at scale, and if you want anything about 10,000 documents, it just breaks any of the vector databases. So we don't think about it as a vector database. We are a unified engine, so that's really, this really brings that. So the dual mode AI, RBC is also doing explainable AI, because they can actually see, as a regulated bank, what data they used, and you can go back and see whether structured, unstructured, to tell you how they came up with that, the research. So it's explainable, and then they are using GPUs to accelerate that. So it's a combination. It doesn't mean that you have to do one or the other, but this is a proof that we actually produce blueprints, so that it's not just what we are saying. So you actually have out-of-the-box blueprint. If you want to use that, you can take that and use your own data, structured, unstructured, and if you want to use GPUs, you have a blueprint from NVIDIA on their portal. You can drop in and start using that. If you just use Python and everything else is, you don't have to understand that. So that's the other part of it, is really trying to combine all of the three things together. So that's really, I would say, in a summary, we kind of focus on Signal Factory, and the architecture of it has these three elements, the three main drivers. And with that, I would say that, moving to the KX, we actually have been on a journey on this, right? So we started in 1993 in Palo Alto in California, same year as NVIDIA. And it's always been focused on helping capital markets, in this case. The algo trading, others started then. The volumes, while today is much more, but there are already all those things. So we've been expanding not only from signal, helping you signal the market data, to expanding to alternate data. We just focused on time series, but now we brought in unstructured and vector databases, everything together. And now the AI era, we are now bringing, what I just talked about. They really enabling you to build architecture, which when people ask me what is happening with KDB Plus, this is the journey we are on. And I think in this context, I would say, we had since the last year, the last Capital Market Summit, KX was part of first FD Technologies in UK. We had consulting group, we had another division, and so we ended up selling other divisions and just keeping KX, and KX became an independent software company, which allowed us to go faster and invest in more software repeatable things. And recently in July, TA, the number one private equity firm in the world, they took us private. So it's giving us way to accelerate some of the growth and investments we are making. And then recently, we also announced a merger with OneTake. So what it allows us to do is, OneTake has got market data as an example from 200 different venues. And we have petabytes of scale data now to enable you to not only curated data, be able to provide you from all these different venues. And then we are able to combine that to time to value. You can actually get to value within 3 days, for example, in terms of if your quant team gets started. So we are going to, as we bring these things together, then at the end of the day, you also want to look at what's happening with your risk and surveillance. And in the context of trade and execution, is it an iceberg? Is it? So we are bringing all of it together and applying AI, not only structured, unstructured, so that you can discover rules instead of applying rules in surveillance. So it's something which we'll be sharing more details as we just are now working with our OneTake colleagues. So it's really bringing again an architecture to tie these things together, because to me, we cannot just be static, because we are working with all of you to partner around building this, and we want to learn along with you. And that's really the journey we are on. So KX is, we are doubling the company in terms of the amount of investments we're making, and some of the demos you'll see outside. We are not just focused on just what we used to have KDB Plus with time series. We have applied unstructured data. We are doing more on the signal generation. We are working with companies like NVIDIA and partnering with many of you on use cases. So with that, I think I want to introduce where we are in terms of our KX as a technology. Our next step in our evolution is KDB Plus to KDBX. X to me represents exponential or accelerated, or accelerating the knowledge extraction. So this is really the basis, all the things I just talked about, the foundation for helping you with the Signal Factory. It's basically it's a unified platform It takes not only enables you to do both structured, unstructured, vectorized, time series analytics, all the things you have known, everything you have done, it will not break, right? The team which is here will show you that everything we have done is to make sure that not only we scale, but we want to make sure we don't break. It's not like Python. You upgrade something, everything breaks. Or any other technology you use. We want to make sure that's our assurance to you, working with you. Second, core performance and low latency is the most demanding. We are not only tested that with what you're doing with capital markets, we are also working in aerospace and defense and the most critical, mission critical environment. So KDBX is developed for both. It's modular, which means that we have, it's like I think about this as an iPhone, right? We actually had different, like you can do batch and real time, and you can do streaming, and you can do analytics built in, but really bringing it all together. So you don't have to deal with as one technology for batch analytics, another one for real time, another one for streaming, and then being able to do the AI, machine learning, and generative AI. These are not different technologies. What we wanted to do was to bring all of it together. And the big thing is that unifies the data and AI workflows together. So we can actually run the models where the data is and during streaming. And you can apply both traditional machine learning and generative AI models. So that's really a simplified architecture. Third, one of the most important thing which is important for us has been being open. And that means supporting Parquet, supporting Iceberg, and being able to make the data easy for you to not only use KDB Plus format, but also we now have support for Parquet, and the technologies we want to expand, and then you support SQL. We are also working on making sure the queue, and all of you in your teams who are using KDB with queue, we are investing heavily in terms of making it easier. The documentation, the LLM for queue is coming, and so that's something which we want to simplify and ease of use. And then the last part is that this is GA in November 17th. So we have a community edition, which I'm very proud what our team has done in the last year, working with all of you, continuously iterating on the type of things, whether it's open Parquet format or being able to have modular components where you can take most of the code you've written and modularize it. So you can use data sharing, and we built MCP servers so that it makes it easy for you to expose and use them across different LLMs. And what we are announcing next week, the 17th, is a free community edition, which has always been one of the asks. Everyone said like, hey, I need to have a free version which can be used for commercial edition. So it's up to 16 gigabytes, it's free. The same capabilities as in a commercial version you'll have. What it lets you do is, we have a community is important. I think as many people who can use this technology, and then we are also making it available for academic, all the universities like Imperial College here, and many university, Cambridge and others. So we got a lot of interest, and so we are making that available. So I'm very proud of what we've done and the team, and so you'll be able to see that in terms of what we have done here. And then I think this is really to summarize, we're building a foundation for all of you to build your own signal factory. It's not just about applying AI, but how do you find signal? How do you create an edge for yourselves or your companies? And in this case, going back to the three foundational shifts we are seeing. One is dual mode AI, which means it starts with the data, structured, unstructured, different types of AI, and then there's no differentiation between your research teams and trading. It all needs to come together. The second is you need to be explainable. You want a causal, so you want to know how you came up with it. It's not a black box. So you want to build your signal factory on that. And then the last is the current compute infrastructure is not going to be enough. You'll see that everybody is building data centers. We are running out of electricity, data power. We are focused on making it the most efficient, use the least amount of energy, and partnering with companies such as NVIDIA to make sure that you don't have to figure out how to use and bring it all together. So we are giving you hopefully a foundation which brings all these three things together. So with that, I would say this is the new architecture, and this is what I believe, it helps you to differentiate, and you need to be thinking about how to, we would love to partner with you. And it's, first of all, I think this is, one of the events where we are doing, we did this in New York, but really we are looking for how can we partner with you to, if you have use cases, we want to work with you, right? That's really my ask is, hopefully you find these sessions helpful and you'll find something you want to take away from here. And if you want to explore any of the drivers, the three things I talked about, I think this morning, speak to our team or myself. And thank you for being to connect with us and helping share. And hopefully we can help you take the next step in your journey. And thanks for taking the time to come.